APA is a boutique firm. We're boutique by nature. It's part of our culture, and it's something that we're very proud of.
Is a boutique type firm. We have about $6.5 billion in assets under management.
We want to focus on one specific area in the financial market, and we feel like having that expertise is like being a heart surgeon and in the medical field.
We want to be the expert in the municipal bond market.
Latter part of '89, I decided to look into if there was a market or a sector in the registered investment advisor business that would specialize only in municipal bonds. So I did a lot of interviewing with people in the business that were registered investment advisors. What do you think of this idea? Is there a market for a company that focuses only on municipal bonds? And they basically, almost every one of them said, you know what, it's not a bad idea. You ought to try that.
This is something that Ken started in 1989, so this is a process we've been ironing out for 30 years. I mean, even when there were monoline issuers and credit was not a big deal, we still had to focus and we were still trying to dig into the underlying issues.
Municipals are very, they can be at least very tax efficient, right? If we can really structure those portfolios to a state level, to a credit level, right? We can gear these portfolios to certain liquidity needs. And that's another very, interesting thing about our market is you have a corporate market that's typically very term driven. You have large 5, 10, 30-year type maturity buckets, right? Whereas municipalities, they have to level out their debt service a bit more. So we can build out a very even serial type structure where you have bonds coming due every quarter, every year, whatever it might be the best for the client there.
We focus only on that sector, and we focus only on those credits. Our credit team goes through each one of those credits on a yearly basis to make sure that we're up to par on our client needs. And we also want to focus just on that specific portfolio. We don't want to mix our portfolios together.
APA looks to put a portfolio together kind of like building an art collection, bond by bond, very specifically looking for the right bond to fit that portfolio for the client's specific needs.
Our portfolios are meant not for individuals. We call on advisors. So we want to work with the advisor that has the individual client.
When we're meeting with our advisors, and often with their clients, we're asking a lot of questions. We want to make sure we understand their overall objectives, their risk tolerance, liquidity needs.
Whether it's from a risk basis, liquidity basis, we work together with the advisor to find the best tailored, customized portfolio for that client.
We share with them how we would customize a portfolio for them that would match up with their overall investment objectives.
Everything is very custom here, so whether it's our investment strategies, allowing these clients to have these certain mandates in place, any sort of customer service, even with our credit, everything's very custom, and I think that's one of the more attractive things about APA.
The fact that we are a boutique firm allows us to focus on the secondary market.
You can go to the secondary market and buy bonds, looking for opportunities to uncover above market yield. We do participate in the new issue market, of course, but we also focus very largely on the secondary, where we feel through our buying practices, we can improve the client's yield and pass that along to the client's portfolio. There are many ways that we can add value for our clients, but one in particular that we pride ourselves on is beneficial tax loss harvesting. We look to be very tax efficient in our strategies, but when we can go to the market and improve the client's tax-free income for every year that they hold the bond going forward, we feel that that's a tremendous benefit that we can provide to our clients. And we don't wait till the end of the year. We do this as part of our active management, and we will do it throughout the year because we feel that it is aligned with our clients' goals of maximizing the tax-free income that they can get from this asset class.
Our credit research group, we focus on the preservation of capital.
The purpose of our credit research team is to really uncover any sort of inefficiencies or also in the opposite of, we're looking at these issuers and we're wanting to make sure that they are able to pay back these bonds.
We have notes on at least 4,000 issuers, and that's, again, not necessarily all holdings, but it's to kind of be proactive with our traders and give our traders, if they see these bonds out there, we may say, we don't own this hospital, we don't own this university, but we're seeing a nice turnaround. If you see this and it's priced accordingly, let's go ahead and move into that credit. So that's kind of our mindset there.
Our whole motto here is, we are maximizing the tax-free income of our clients, but this is also their sleep at night money. So I would say maybe 70 to 80% of all of our holdings are probably rated AA or higher, but we're still doing a deep dive of all of these credits just to make sure that their financial trends are going the right way, they're properly rated by the external rating agencies, and so we're buying them at the proper level.
The continuity between the traders, the portfolio managers, the credit team, really all working together, right? And I think another thing to really keep in mind is just our ability to source bonds with the street.
Why do we have low turnover in our firm? What is the glue that holds this whole team together, the glue? And why are we different and so forth? The answer to that is that everyone respects each other. In other words, we have total respect for each other in this firm. And I think that goes a long way of pulling the thing together, the glue that holds the team together.
Our vision for APA is to continue this boutique nature that we have.
As APA grows, we want to maintain our boutique nature and focus exclusively on the management of SMA municipal bond portfolios.
We want to be sure that our clients get their needs met, whether it's liquidity, risk, and tax needs going forward. And so our future is to grow very smartly, not fast, but very smart.